Good afternoon, everyone. We're sorry for starting a bit late. Our apologies, but we'll go right into the discussion. Good afternoon, everyone. You're welcome to the 6th edition of the Aluko and Oyebode Insider Series. My name is Oluwatamilore Sowunmi. I'm an associate in the Governance, Risk and Compliance and Startup Practices of the firm. I'll be moderating this session. So a brief introduction. Aluko and Oyebode is a full-service law firm with offices in Lagos, Port Harcourt, and Abuja, providing a range of services to clients who cut across dispute resolution and corporate commercial practices. So we're talking banking and finance, tax, employment issues, immigration, oil and gas, governance, risk and compliance, environmental, social and corporate governance, advisory, really a range of services. The Insider Series is an initiative of the startup team of the firm, and we basically do this to engage key players in the startup ecosystem. We do this by discussing various issues, development, and try to gain an insight into the startup ecosystem. So that's basically the reason for this Insider Series. So right into it. So Lumi, welcome. We're glad that you accepted our invitation and you're with us today. So I'll just give a brief introduction. Our guest is as well, so our audience can be aware of who you are, Lumi.
Thank you, Oluwatamilore. Hi, everyone. I'm Lumi Mustapha. I'm currently head of legal for Founders Factory Africa. We're a venture incubator and accelerator company. Prior to working with Founders Factory Africa, I'm a partner in a law firm called Technological Partners, based in Lagos, and we specialized in media, technology, and entertainment services specifically. So for most of my career, I've practiced both in Nigeria and the UK, but primarily in sort of entertainment and media sectors. So I've done a lot of IP law and corporate law, but in my firm, I was heading up our technology practice, and that got me started to work with a number of startups, and those startups, we became their representatives up until the point a few of them were started raising funding, which I helped them in those sorts of transactions, which now gave me a lot of experience now in venture capital and private equity law. So really, that's my main area. I'm a corporate lawyer with a lot of experience in IP and venture capital law, and I'm really, really happy to be here to discuss the Startup Act and other issues around the ecosystem.
So that's introduction. So I must say I professionally stalked you a bit. So Twitter, LinkedIn, a couple of Google searches, and across the platforms, I found a quote everywhere I looked. So there are no solutions, only trade-offs. So what does this mean and how is it significant?
Yeah, it's a quote I live by. It's a quote by an economist called Thomas Sowell, a Black economist, and it always helps me remember, particularly as a lawyer, you know, we're problem solvers and we're always having to find ways for clients to achieve what they want, but it's always about managing clients and people's expectations that, yeah, we can try and get you exactly what you want, but there's something that you have to give up somewhere along the line, which is why there's always a trade-off somewhere. And particularly as transaction lawyers, I'm sure you all know as well, the whole thing about being a transaction lawyer is absolutely knowing what to trade off on and what not to trade off on, because that's really the only way you can negotiate and get deals done. So I think it's something that always just reminds me. And like I said, I used to work in media, so I've worked with musicians, actors, creatives, and now with founders. And I find there's a common thread with all of them, which is that they're all potential geniuses, but they all assume they can get everything they want without any trade-off. So it's about managing expectations, not only for them, but to always remind me as well that however good something looks, you need to always look hard at it to know what the trade-off is, because there has to be one somewhere.
Since we're talking about the Startup Act today, is the Startup Act a solution or a trade-off?
the Startup Act is let me tell you why there's a trade-off there. It's actually a brilliant thing because I think it's very positive legislation, and if it's implemented properly, it can really do a lot, I think, to spur investment in early stage businesses in Nigeria, technology businesses. But the trade-off is, that now the Startup Act creates sort of centralized hubs of where people can either apply to be labeled as a startup, or the advisory forums and things of that nature. So the trade-off really is that because it's creating some funnels, it might become a thing whereby if people are not coming through this process, it might be harder for them to raise money outside of it just in their own time. So, and also when you're dealing with government, it comes with its own particular unique trade-offs as well. So it's very, very important that the government is recognizing the ecosystem and putting mechanisms in place through the Act to try and help develop it and create a more conducive environment. That's fantastic. That is a solution, but there is a trade-off, which is you're dealing with government. Governments are quite slow, quite bureaucratic, and you will find that these things may start seeping into what very good intentions with the Act, but implementation might be difficult. I generally always say Nigeria, we have more laws than we know what to do with, but we struggle with implementation. So this is another law that's relevant. I think it's timely and I think it's very good, but what happens with its implementation is really, really the key thing.
Why we're having this discussion today, to go beyond the letters of the law and go deeply into how the Act can be implemented and how we can have the impacts felt in the ecosystem. So just for the benefit of our audience and to explain what the Startup Act is for those who don't know what are here to find out more about it. So the Startup Act is enacted in October 2022, and it seeks basically to provide a legal and institutional framework for development of startups in Nigeria, and basically create an enabling environment for startups to thrive, to grow, to scale, and be what we want them to be, basically. And as well, it's to position the Nigerian startup ecosystem as a leading digital technology center in Africa. And on application, the Startup Act applies to two categories of organizations generally. So the first arm are companies that are registered under the Companies and Allied Matters Act and have acquired the startup label. And the other hand are organizations and establishments whose activities affect the creation, support, and incubation of label startups in Nigeria. So those are the broad categories of organizations that fall under the Startup Act. So it's important again for us to have discussion because, as you said, there's a lot of words thrown into a lot of our laws, a lot of lofty ideas and lofty ideals, and really we want to feel it. The average Nigerian wants to see how the Startup Act affects them. The average founder wants to see what opportunities that he or she can get from the implementation of Startup Act. So that's why we're having this discussion today. And of course, we've also seen across various jurisdictions that they have enacted Startup Act, how it has benefited them. So that's what we're discussing today. So on this premise, let us start with the Startup Act. So Lumi, what are your general views on the Startup Act? How do you think it might change the fintech landscape in Nigeria and the continent following implementation?
Yeah, again, I think it's really, really positive legislation. I think it's timely, and I think it was, I'm happy that the right kind of people in the ecosystem have definitely been consulted to give their input on it. And so I'm quite excited. I think it should, if implemented correctly, make life easier for startups, in particularly two areas. Getting regulatory support. I mean, particularly the fintech landscape. I think I found with a lot of fintechs I've worked with is that a lot of the licensing requirements, both cost-wise and in terms of the process, is quite onerous, and particularly for young companies that don't necessarily have all the resources or a track record of transactions in place to be able to sort of meet all these requirements. I've found it's been quite difficult. So on the fintech side, I think the fact that the Startup Act does facilitate access to relevant CBN and Securities Exchange Commission SEC sort of sandboxes and access to getting quicker processes for regulatory requirements is a great thing, and I think should help a lot of fintechs, because my experience is that a lot of fintechs usually just work under the radar without the requisite licenses until they get to a certain size, usually around Series A or Series B, and they raise a requisite amount of funding, which they then use part of that funding to go and regularize with the CBN. Now, of course, that's not advisable, but needs must. If you're an early stage startup, I don't really see where you're going to be able to find yourself 10 billion naira or whatever the minimum share capital is, 2 billion naira or whatnot, to be able to go and get the requisite licenses. So I think it is very, very positive. And I think if done correctly, and if the organs that are the statutory organs that are created by the Act do what they're meant to do, I think it should have very, very positive effects, not just for fintechs, but businesses across all sectors. Another thing I think it really will help them with is the potential for these startups to benefit more from tax incentives that are there, but again, generally quite difficult to access because the current way they're structured did not make it conducive for early stage technology business to particularly benefit from. So I think on both of those sides of things, regulatory compliance support, as well as support in being able to apply for the appropriate tax incentives, I think in and of themselves will prove to be a very positive thing.
Fingers and toes crossed. So just moving on from that, so startups are defined under the Act as companies that have not been in existence for more than 10 years. Given that there are startups that have been in existence for more than 10 years, but have been unable to scale for a variety of reasons, what are your thoughts on this provision and how they might be disadvantaged?
Yeah, I mean, my starting position is that there would have had to be a criteria. We could both agree there has to be a criteria to be able to delineate and identify what businesses or organizations would be eligible. And I think with any criteria we'll give, there will be some that just do not meet the criteria, even though they might be actually people that should be eligible for it. So in terms of the time horizon, that a business mustn't have been in business for more than 10 years. Yeah, I can see why that might cause some issues. But generally, with my experience, the startup journey is a sort of 10-year journey. So from when ideas are incubated and businesses are started, going through the pre-seed and seed stage and Series A, right up to the point of a major exit, it's usually around a 10-year life cycle anyway. So for a business that's older than that, it's sort of, I mean, how strong is the business if it still requires this sort of early stage kind of the support designed for early stage businesses? If it's more than 10 years old, I don't really see that business has much strength in that regard. However, as I said, there will be some that may be eligible, but unfortunately won't make the cut because of that time frame. But there are other ways that you could try and make the criteria. Which could be, you know, maybe how many people you're working with or how many staff you have. Either way, whatever criteria you use, there will be some that will unfortunately miss the cut. So I wouldn't want to focus too much on the fact that there's a 10-year limitation for businesses that want to get in. I think given the life cycle of startups generally from inception to exit, that sounds about right to me. But every exception, as I said, every criteria will have an exception. But generally speaking, again, it's not unreasonable, though the requirement, there's another specific requirement that I find a bit more worrying that might be a bit difficult, but we'll get to that subsequently in a later discussion.
Basically, are we saying that if in 10 years as a startup, you haven't been able to scale or move beyond the stage that you get the support that startups would require, then maybe you should be thinking of starting up something else?
Exactly. Well put.
Well, but just to pick up on something you said earlier as well, regarding this 10-year timeline. So you said that for some startups, they start up with the idea and try to chase funding and then go on later to get the requisite licenses when they've been able to get investments. So is it also possible that a startup may say, okay, at this stage, we're still working on our ideas, but we have XYZ funds that are able to help us get registered as a company. So they get registered as a company and are still in the process of getting investments, but the 10-year timeline just goes off that way. So for that company, they've been registered, but they've not been fully operational. So how would this also impact those type of companies that fall under that category?
Yeah, that would be a difficult one. I mean, because you're right. It would be extremely unfair for those kinds of companies, especially if at the point where the 10 years is up, where they would just because they might still be eligible, it's because they didn't have the requisite license or whatever, which then they then get after. I mean, the normal thing, what someone could say is this, well, just go and register a company again, move all the IP and staff to it and do it again. But when you're talking about regulatory licenses, that means you'll have to go and start that process again, because it's generally, those things are not transferable. So, I mean, that's also why I highlighted the regulatory support side of what impresses me of the provisions in the Startup Act, if it's implemented properly, because these kinds of issues should be minimized to the least. And so startups can really, within that time frame of the life cycle of a startup, can really give the business a good go with, you know, knowing that they have all the relevant things in place, and see where they get to. But ultimately, it will be harsh for some businesses, whatever criteria you use, and I will maintain that not everyone will make the cut, whatever criteria you use, but at least there's something in place now that's a framework that people can use as a benchmark.
There has to be a criteria. There has to be a criteria. So flowing from that as well, and to our previous question, for the benefit of our listeners, what are the key criteria that you think make a startup, an entity, a startup?
Yeah, specifically when we're talking about technology-enabled startups, yeah, generally they have small asset bases. So, you know, in terms of the resources they have, you know, they're not like manufacturing companies that have a huge amounts of equipment or land. It's generally, you know, because it's so technology leveraged, they have a small asset bases as a whole. Until they start really scaling and generating cash. Generally, the teams are quite small also, 5 to 10 person teams on average are what I'm used to seeing. And generally small but growing revenues and other operational metrics. So it's sort of things that are showing progress. It's not really about the absolute size of the number, but the rate of change in a positive direction is also another significant characteristic of startups. I mean, I don't know if any of those things would have been appropriate as a criteria, but generally from my experience, those are the sorts of characteristics that are common that I see across most startups that I believe the Act is trying to address and help.
I agree. So let's talk about innovations and implementation points of the Act. We know that funding is highly crucial for startups. It's the fuel they need to move and scale as we want them to. So we see that under the Act, there are a couple of funding strategies or supports that's provided. So there's credit guarantee scheme, there are tax incentives, and we also see the establishment of the investment seed fund that's to be funded annually with a sum not less than 10 billion naira. What advantages do you think that this development may bring to the ecosystem? Do you think it will have a significant impact on the ability of early stage startups to scale?
Yeah, yes, I do, but indirectly. Let me explain what I mean. The seed fund is a brilliant idea, and I think it's well thought out. And to make the Sovereign Investment Authority the fund manager, I think makes sense, because the Sovereign Investment Authority has been doing pretty well with Nigeria's sovereign asset investments over the last few years. But what I see is that the 10 billion should not be seen as the sole way that's going to provide the necessary funding for the sector. But I see it, if the 10 billion is used to spark or stimulate private sector funding to match it effectively, is where it can really have some legs. Let me explain why. Generally, an early stage startup, or at least in my experience, will usually receive an average of 200 to 300K dollars in pre-seed funding. So what that means is that from your inception stage to the stage where you actually get to a series, an actual priced series round, whether it's just a series seed or a series A, you usually would have taken in and required to take in somewhere in the region of $200,000 to $300,000 to get in the people you need, build an MVP, prove that the MVP works, and start showing some product market fit, which is sort of the stage that you will get seed or Series A funding. So if we just use those numbers, and let's say, so pre-seed stage, you'll have 200 to 300K you'd need as a business. Maybe another $1 million if you're trying to get to scale, which is sort of what I meant, the seed or Series A. So based on these numbers, if this seed fund is used only for pre-seed funding, which I think makes more sense than trying to use it for scale funding in any way, theoretically, based on those numbers, it could fund up to maybe 50 startups a year. Now, that's not much as far as I'm concerned. It's a great start. I mean, it's something that we need the catalyst for, but I don't think it moves the needle much in terms of the ecosystem. But if that is able to, for example, say this 200 in pre-seed funding, because you've come through our portal and you're labeled as a startup, and that means, you know, private investors can see that there's diligence and all those kind of things, that the private sector says, oh, because you are a labeled startup and you've got some funding from the seed fund, we're definitely matching that. Now, if you get them matching 50, like half and half, then that 10 billion can actually fund 100 startups from the 50 we've decided. So if we think about the seed fund in a way that it validates startups to give the private sector more confidence to invest in that particular startup or group of startups, then I think it can really have some positive impact. But if we're thinking that the seed fund by itself will be able to create a lot of change and catalyst by itself, the 10 billion won't get far, considering what startups need to at least get their ideas and businesses to a stage where more bigger institutional private sector funding can kick in. So, I mean, it's still a great thing. I think if they think about how they implement it to try and maximize the impact it can have, then it will be great. But I think if they look at it as a sort of catalytic fund to spark private sector matching, then I think we might be onto something really positive.
So it's beyond just the fund itself and the sum that's been available. So it's more to what that can bear beyond just that 10 billion naira that's to be funded annually. So that's a key takeaway from that. So flowing from that, we also see that the fund manager, as you said, the Nigerian Sovereign Investment Authority, has also been given the authority, I would say, to recommend the startups that would benefit from the seed fund. But the Act does not also provide for the grounds to reach such decision on the recommendation. Do you think that this would lead to arbitrariness or diminish the intention in setting up this fund?
Well, absolutely. If it's not ironed out, yes, and if it's just solely discretionary, it leaves it open to arbitrariness. But I am having faith in the fact that yes, the Sovereign Investment Authority is appointed as the fund manager, but it does answer to the forum and other governance bodies within that are created by the Startup Act. So there will be some oversight in that regard, which I think is a good thing, and particularly because the forum I mentioned does contain a number of key private sector stakeholders. So I think that's quite important. But the fund manager too is to, in consultation with the forum and the secretariat, to come up with a framework for a basis or thesis for how the money will be dispersed, or the criteria for an eligibility for what funding you'd get. So I think in that kind of document too, which is effectively just a sort of an investment thesis document, in an equivalent of that, there's some influence can be had there as well. As I said, that's has to be done subject to the forum's oversight, and so there is some ways to be able to have some influence. And of course, there is the general sort of public forum that allows the general public to contribute as well. So, I mean, memoranda and other such documents could be submitted with ideas on how best for that framework to be developed. But ultimately, it's not as if the Sovereign Investment Authority has just complete sole discretion. There are some mechanisms built in there. But I agree with your initial position, which is that if there isn't sort of detailed and structured format or framework for how those funds should be managed, it does raise a huge risk that things can be done arbitrarily and in a manner that doesn't benefit the entire ecosystem. Also note that the Sovereign Investment Authority doesn't have much expertise in early stage startup areas. They deal more with big asset infrastructure kind of investments. So like I said, I do commend them. They're quite an efficient operator in how they handle those kinds of large scale asset heavy investments, but this is a different kettle of fish, so to speak. So I think it is very important that they take advice and consultation from the relevant bodies created by this Startup Act, because those bodies have representatives on them that are experts in this area that should be able to contribute.
I think beyond, they need to understand the nuance that comes with startups and the support that they need. But just before we go to the next question, for our audience, please feel free to drop in your questions and your comments in the Q&A box. We'll address them. We want to make sure that this is as engaging as much, make it as much as we can, make it engaging. So please feel free to drop your questions. So flowing from that, we know that the Act really tries to ensure that stakeholder engagement is maintained. So we see that 4 members of the startup ecosystem are to be part of the council. Another key innovation is the establishment of the Startup Consultative Forum on the startup portal, and that also provides for the possibility of sharing information and collaboration in the Nigerian startup ecosystem. So just ask, what are your thoughts on the innovation, that's the Consultative Forum, and how do you think this will impact the ecosystem?
Yeah, I'll start with the council, the Digital Innovation and Entrepreneurship Council. I think it's a great way it's structured. It's for my liking a bit too government heavy. There are about 11 government appointees there, but they are necessary considering they're in key ministries that will affect the startup. But I'm very, very happy with the 4 members, private members from the ecosystem. They have fixed terms, so they can't just be there for life. So we can always freshen the blood, so to speak, through those representatives. And I think that's generally quite good. How it works now is really what matters. Same thing with the startup portal, a great idea. And I think if it does work efficiently, it will make things easier for startups in their interfaces with government and things of that nature. But it also creates a bit of a big key risk, because the party that's been appointed, they'll be the custodian for that. I mean, that their terms of service and engagement are going to have to be very tightly drafted, because that person or body has a lot of power in terms of managing the portal and administrating it. And the portal is the key to the entire thing, really, of what the Startup Act is trying to do. So I'm really going to be watching that closely to see how that develops and how easy it is for startups to interface with it, and making sure there's minimal downtime. But again, as I say, I think all these mechanisms, these organs are very, very useful, very necessary. How they work in practice is the question, and how efficient and effective they will be. So I'm definitely watching for that. But I think we've got the right pieces in place. It's how they're utilized that matters.
Implementation will be very important for us to see all of this come to fruition. So just picking up on what you said as well, how important the startup portal is. And we know that a lot of things are tied to startup portal, looking at the provisions of the Act, so down to even the registration, everything, getting the license and the label, all of these things are tied to the portal. But we see that there's some crucial points for implementation that are also not provided in the Act. So when exactly will the portal become live? What are the timelines for the registration? So all of these issues we see have not been addressed. Do you think this would affect implementation and effectiveness of the Act?
Yeah, I mean, I can definitely understand your concern, and I agree with you. I just don't think the Act would be the right place to put details like that, because don't forget, the Act, once it's in the Act, to amend things takes a long, long time. So I generally prefer when primary legislation like this is very high level, provides a framework, but doesn't try and get into too much detail. Now, where the detail should be and where we must make sure it is ensured is, as I said, in respect of the startup portal, the administrator's engagement agreement. I mean, that's just going to be crucial in terms of the sort of the scope of services, the level of services, in terms of warranties in case things go wrong. There's a lot of responsibility on that person. So I mean, the document would be either in the terms of reference from the council to such a party that's going to be using to providing that service. So the terms of reference could be quite extensive, as well as the actual agreement they get into with such an administrator. And I think generally in the terms of reference of any of these organs is where a lot of the detail can be put into, and that detail can be flexible because it's subject to change by that organ itself. Whereas if the details in the act and it's slightly wrong, or we find that it's not conducive, changing that becomes a major problem, knowing how our legislative system works. So I definitely understand and I agree with your concerns, but I think that detail can and should be dealt with in other documents rather than in the main act itself.
Because I know that in the act as well, we have a lot of need that would make regulations, the council will make regulations, have a framework. So I think, just as you said, this would enable them to do all that it needs to do to be able to implement the act effectively. So what comes to my mind now is, so in Nigeria now, in 2 months or 3 months, depending on what happens eventually, we'll have a new government. So there's going to be a regime change, and the elections are near and all that. Do you think that this would have an impact on the act, especially because, I don't know, we haven't seen anything come out, and the government, this present government's time is almost up. So what do you think? Would this have an effect on our dear Startup Act?
Well, it's possible. It's very possible, sad to say. I hope that whoever gets in builds on the good things that were done by the prior, even if they ignore anything that might not be that positive. But everything's politics in Nigeria. But the good thing is that the act is a law now, right? So that's been done, that's on the books. And for any future government to remove that, it's a long process, all right? So that's one thing. Ultimately though, now that the act has been passed, it's not really who changes hands at the federal level of government, but so long as the people in the MDAs, because they're a crucial part of this entire act and ecosystem, the representatives in the various MDAs, Ministry of Finance, Ministry of Industry, Communications Ministry, NITDA and such. As long as the people that are working there, generally those are civil servants, and we hope they're not meant to be political. So I'm hoping there should be some continuity in that regard, but I don't like to speak with too much authority. First of all, I'm not a specialist for Nigerian politics, but from what I know of it anyway, it's a crazy game, and who knows what could happen. But just as a bit of light at the end of the tunnel, I think that if the act was still in a bill and was still in the process of being promulgated as an act, and it hadn't been, it might get killed by a new government coming in very easily. But now it's an act, it's on the books. It's really more about focusing on who is in the various MDAs that have crucial roles to play in how the overall the act is meant to be implemented. So I'm keeping my fingers crossed, and I'm staying positive. But obviously there is a serious risk there, a political instability risk, but I'm hoping that it shouldn't prove to be too much of a problem, and that the key people in the relevant ministries and departments and agencies are still able to do their job professionally and to make sure that it's implemented.
That was a question from Zainab. So we have another question. We have a couple of questions now. I'll just take, I think this is right up your alley. What are the key intellectual property considerations for startups?
Yeah, it is something I do a lot. Look, let me start by this. There's different kinds of intellectual property. There's intellectual property that can be protected by copyright or trademark or patent or industrial design. Generally with startups, the main assets I know that they have are maybe the underlying code that they use to develop the technology they're using, maybe the name that they're trading under, maybe the website domain that they have. These are the sorts of key assets a startup has at the beginning, and they are very important because before an investor puts money in, it needs to know either one, that you own all the IP that you need for this business to grow after they put money in it, or if you don't own it, that you have the requisite licenses so nobody is coming to sue you to take their money they're giving you to grow with. So, I mean, in terms of that regard, those are the key places to start. And of course, yeah, doing the relevant registrations is important, but it is a balance because these registrations cost money. Early stage startups usually have cash flow issues. So it's about really just prioritizing and identifying what is really key and making sure that at least you have an idea of what your valuable assets are, even if you haven't protected them yet, so you can identify them first. And then at some point, you can speak to a lawyer who can then start working on trying to protect or register them appropriately when the time is right. Because I mean, I wouldn't advise startups to go and spend all the money they have to go and do all these registrations and things of that nature. They are key, but if you do all that and spend money on registrations, and you have no money to run operations to prove your startup works, what good is that to anybody? So it's a balance. But to answer the question again, the key IP that I see that most startups have to make sure that they're aware of and they start thinking about how to protect, however early the stage is generally the code that they use, the name of the product or service that they use for brand reasons, the website domain name that they use. They have to make sure that they own that website domain, and that's usually a good start. And depending on what kind of area of technology the startup's into, maybe patents might be involved, but generally those three I know are very common. And something startups should know is that most sort of sensitive information, if it's not protected under a particular IP regime, is protected under something called confidential information. Like, you just simply protect it by keeping it limited to who can access that information, whether it's any of the things I've mentioned before, or you make sure that anybody you give it to, it goes with a notice or something letting them know that it's confidential. And these are other simple sort of ways that you can use contractually, even before you get to the stage of having to do registrations and things of that nature. But please keep it in mind. I know that at the very early stage, you might not think it matters, but it's important to keep track of it, because ultimately it is that IP that is really what is going to be leveraged when big investors come in, because that is what the business is built on. If you remember, I mentioned earlier that a characteristic of startups is they generally have small asset bases, but the real value of their asset base, however small, is in that IP. So it does play a big part, but I don't advise startups to go and break the bank to just start doing registrations until they start at least seeing some progress.
Okay, thank you. That's the packed answer. Thank you. So back to the Startup Act, if you were to introduce one change to the Startup Act, what would that be?
Yeah. I mentioned earlier that there was one sort of issue I didn't like. So obviously part of the criteria for being eligible, as you mentioned earlier, you have to be a company registered under the Company and Allied Matters Act and other such things. But one of the criteria also is that the Startup Act does not apply to businesses that have holding companies, right? The reason I find this, and I understand exactly why it is, the Startup Act is meant to help Nigerian startup businesses. So businesses that are registered here, and they're operating in the market. However, like I said, the Startup Act, particularly with the funding, the seed funding element, I see it as really being a catalytic thing to stimulate private sector investment. But the challenge is that private sector investment, at least the ones I deal with, there's not much domestic from Nigeria private sector investment generally for early stage. So most of this investment, especially if you look at the stats, almost 90% of all funding for Nigerian startups comes from international sources. Now, these international sources have specific, for either their regulatory reasons or internal governance reasons, they don't like investing directly in entities within various local markets. For loads of reasons, currency risk, political stability risk, all these kinds of things. So they generally prefer investing in holding companies in more stable jurisdictions, and those holding companies then own the shares and own these companies that are operating in Nigeria, for example. So I think putting that limitation in, and I understand exactly why it's there, I think sort of it runs counterintuitively to what the Startup Act is trying to achieve. A big part of what it's trying to achieve, in my opinion, is that it's trying to stimulate more private sector funding for early stage startups. And currently, most early stage startup funding is coming from international sources. So if you wanted to align with that, you really should align with the fact that international investors would want to invest in a holding company. So they could have put some criteria to make sure it's not just a holding company that's owned by someone abroad or whatnot. And you could have tied it to holding companies that are only required to be there because of investment. But the fact that it's completely left it out, I think may cause issues. I hope I'm wrong, but that's just one thing I might change based on the question you asked.
I think it's really common for startups. So you ask them, where have you been registered? And there's like, oh, Delaware, holding companies, Delaware. And so I think like you're right on how this may be an issue. So I guess this would be for fully indigenous Nigerian startup companies. Yeah.
Which is a good thing. I just hope that those companies are able to attract funding outside of just the seed investment fund. That's all I hope.
So what do you think are the pros and cons of obtaining the startup label, and what should startups consider when weighing whether or not they should fall under this category?
Yeah, I mean, the main thing I can think of is the formality and reporting requirements. So if you're going to apply to be labeled as a startup, there are a lot of formalities you have to comply with, right? And going forward, if and when you receive funding or other kinds of support through the organs of the Startup Act, there's a lot of reporting requirements. So you have to update the relevant bodies annually or whenever it is on what you're doing with the funds, the progress you're making, whether you're creating jobs, these kinds of things. So a startup has to know that if it wants to be labeled a startup, these are back to my no solutions, only trade-offs. So it's great that the Startup Act is there. You can get labeled as a startup, get access to funding from the seed fund, get access to training, potentially get licenses for Sandbox in a very easy way, tax incentives. But the trade-off is you have to run your operations properly and you will be held to account for it. So really my thing is, if you're a startup and you're able to make sure you meet those challenges and don't try and cut corners, yeah, it could be for you. Also, where do you see your future funding coming from? Because again, if you're seeing your future funding coming from private sector investors abroad, being labeled a startup that has to be registered in Nigeria might cause a problem going forward. Because yes, you can prove to investors that, yeah, this startup has been sort of validated by, the Startup Act's organs and whatnot. However, that track record won't carry to an offshore company that you might have to set up because the investor will only invest on the condition of that. So really it's a function of, where do you expect your funding to come from? Do you expect it to be after you get funding from through the Startup Act? Do you intend to get funding through the sort of non-profit side? If you do, I think that's a nice fit because it's a similar kind of process and similar reporting. But if you're looking and you're thinking you'll get private sector funding, particularly from abroad, until there's some alignment with that sort of investor community with the Startup Act and the portal and all that's going on here, it might be better to wait off and see if you can go that track separately. So, I mean, apart from that, I can't really see anything that would stop anyone wanting to go for it. But really, if you're an operation that, you don't really have formal reporting or governance or things like this, which, a lot of early stage startups don't take that seriously, and understandably in some regards, if you're not willing to build that in and continue with that indefinitely, it might not be ideal for you. But I really don't see why that should be a problem, but it's just something to think about.
Compliance, obligations, corporate governance. We've seen again with the recent happenings that they are very crucial for our startups.
Crucial.
and we all need to just get on with it. So we'll just take some questions quickly. So one person says, as a local capital investor in Nigerian startups, how do I stand to benefit from the Startup Act?
Well, hopefully, because you'll get businesses that are labeled startups would have gone through much better diligence, and you can trust more the information you have, right down to the metrics, as well as, entity registrations, license compliance requirements. So, and I think that hopefully should help stimulate local capital investment, because personally, I've been quite disappointed with the amount of capital that's deployed domestically. And it's because, traditionally the funds we have locally, they're more sort of private equity based rather than venture capitally orientated. I mean, we are getting more and more now, Future Africa Fund and things like that. But generally, I find that it should spur more local investment. I mean, local investors are generally quite scared off by early stage businesses. So I'm hoping that the startup portal and the labeling and all the other sort of backing through regulatory compliance and things that the Startup Act will provide for local startups, that should give more confidence, hopefully, for local capital investors to start dipping their toes in a bit more.
Question from from the audience. The Act did not state the source from which the 10 billion naira is to be received. So the Section 19 leaves the funding to any source to be approved by the council. The council does not control Nigeria's revenue. How would this be resolved?
Yeah, I mean, I think it's quite smart wording. They're just keep pushing it down the can. But the only thing I'll say is at least funding at the federal government level is usually determined between the Minister of Budget, the Minister of Finance, and those kinds of things. At least the Minister of Finance is there. I don't recall seeing the Minister of Budget there, but with the Minister of Finance being there, I'm sure that they are, at least that someone could be held accountable to at least let the council know where the funds will be coming from for each year as it goes. But it is a good point, but I think the Act was, it could not avoid that, because really, it would be quite a tall order to appropriate, because effectively assigning money to things, it has to be done at an appropriation level. And so really it would have been difficult to do, or at least from what I can see, would have been difficult to do, to allocate and say a specific source, especially when the actual entity, the organs, the startup portal and the council, they're not revenue generating entities. So it would be inappropriate for the Act to cull budgets from other existing things which have been appropriated by law. So I think this is probably the easiest way to do it. It's not ideal, but at least, like I say, key people that are involved in decision making for how federal government budgets are spent are within the council, and hopefully they'll be able to be pinned down there on a regular basis as to the amount of budget that will be released and where the funds will come from.
Again, hopefully.
Indeed.
So another question I think we should take quickly, we're rounding up already. We'll take two questions. So someone says, Fumi says, recently there has been massive layoffs in the tech sector internationally and even in Nigeria. Do you have any idea why this is happening and how we can prevent this in future?
Yeah, look, it's a simple macroeconomic issue. We're in difficult economic times globally. There's a lot of inflation. That inflation is leading to slower economic growth because there's less activity because of high prices. And that slow economic growth is making investors much more wary of where they invest funds. So a lot of investors are making investments in what are called safe investments now, maybe government securities in like the United States or other sorts of perceived as safe economies, even though they're having their difficulties. So, I mean, early stage venture investment is quite a way out on the risk curve. So it's, let me put it this way, it's one of the riskiest kinds of investments you can make. And investors generally only have the appetite for risky investments in economic boom times. And we've had an economic boom time, at least globally. Nigerians might disagree, but globally, you know, it's been for the last 10 years, nothing but sustained economic growth, and investments and investors have been willing to take risks in riskier investments because of the potential returns that they could get. But now that we're having slowdowns, we're likely to see more of this, but it's not something to worry about per se, because ultimately these slowdowns don't last forever. These things move in cycles, and the companies that are able to survive in slowdowns are usually the ones that come out on the other side as the big major companies for the next, you know, however many year upcycle. So for example, you know, the Facebooks, Twitters of this world, they got to their huge size by surviving the 2008 financial crisis, for example. And before that, you know, the sort of businesses that survived the 2000 .com bust became the mega companies that you see now. So ultimately, it's a tough time economically. A lot of businesses will find that they find it hard to raise cash. And that might lead to them having to lay off more staff. But ultimately, the companies that have the strongest fundamental business models, that they manage their funds as best as they can, and they can survive this down period, you'll be surprised, but they will they have a huge chance of becoming the next major companies once the cycle is over. So it's scary times, but they won't last forever. And always just think, like, it's in downtimes where profits are made. Profits are collected in the uptimes, but they're made in the downtime. So just keep that in mind.
That's key, but I'm sure Nigerians will not agree with you that there's been in the economy, because we haven't felt that.
Exactly.
I speak on behalf of my people.
We're together. I hear you. That's why I said I'm sure Nigerians might disagree with me, but that's why I said it's globally, of course, but we always are exception to our own rule, are we not?
Another question I think is also important for me is, what role do legal advisors play in the startup ecosystem, and how can we support the implementation of the Act?
Oh, legal advisors are crucial. Of course, I would say that. And I know, of course, people will say, of course, they'll say that they're lawyers after all. But no, it is important. I mean, ultimately, a simple way to put it is this. To get money, you need to have the right paperwork. I mean, to get real money, and the bigger the money you want, the better your paperwork has to be, just on your own internal side. And then obviously the documentation that documents you getting the money, whether it's an investment agreement or a safe or a convertible note. So whether you like it or not, if you want to raise significant funds that are going to help your business scale and take it to the next level, whether you like it or not, you have to deal with paperwork, and it's really better to have experts deal with that for you. Now, lawyers and other advisors, accountants too, can be very helpful here in, you know, accommodating the fact that startups have difficulties with cash flows, and structure fees and packages for them that can be more conducive. Ultimately, like I said, I got into venture capital law because I worked a lot with startups and built relationships. Believe me, at the time, my two partners were like, well, they're not paying anything. Why are you wasting time? But, you know, it was a long game we were playing, which is that I believe this business has some potential. Let me help them make sure that they run their operations correctly. In the event that, you know, an investor should be interested one day because they have a good business. But if that investor is interested and their paperwork is not in order, it's too late to start trying to fix it then. And, you know, I just sort of happened to get lucky. Some businesses we work with did start raising big money. And it was crucial that their paperwork was in place, because investors will always first do a very thorough due diligence on any business before they invest money in it. And that due diligence is where the paperwork, the paper trail of the company's activities and everything it's always done matters. And if you're now scrambling at that point to try and find and build a relationship with a lawyer to try and fix things that have already been broken, it's a very tall order. So legal advisors are crucial. So I think both lawyers should look to build more relationships with startup ecosystem co-founders and try and find ways to accommodate being able to provide services for them despite their cash flow issues. But of course, lawyers have to pay their bills too. So startups and founders need to start thinking about how legal things are important from the beginning, and have a smaller amount, put it aside for you to start finding and building a relationship with a lawyer that will be with you until you become a unicorn. That's really how it should be, rather than trying to do it on a transactional basis or piecemeal basis or DIY. It might work initially, but it will always come back to bite you. So I think it's important both sides start interacting more and look for ways that they can collaborate better.
Just have to pay their bills, please.
That's the crucial thing. That's the cuckoo.
So just as you mentioned due diligence, I know a lot has been happening on how it's also important for startups to do due diligence on their investors. Just want you to touch quickly on that, especially because of the times that we're in now.
Yeah, of course. Like I would say, like most times investors looking to put money into startups, it's all about the investors and their requests and their demands. You know, if you're ever going for a job interview, it's all usually about the prospective employers' interview questions. But the best potential candidates always do diligence and ask questions of the employer too. So something for founders to always realize is you guys are operators. You started businesses so you can build them and help those businesses grow. Now, when you're doing fundraising, it's a bit of a distraction from your operating activities. So the time it takes to do all the work to get fundraising is time you're distracted from running your business. And what's crucial is that you don't get investors that waste your time. There are a lot of investors, I'm telling you, I've met a lot, and I hope I don't meet too many more, But, you know, they like the idea of, you know, discussing as if they're going to make an investment, but they could be what's called a zombie investor. So generally investors have a period when they're meant to deploy the money they've raised to invest. And after that period, they're usually they don't have any more money to deploy. So they're little questions that you could ask an investor, like, when was the last time you made an investment? Or when was the last time you made an investment in Nigeria or sub-Saharan Africa? And these kinds of things indicate to you whether how serious they are, how likely it is that they would be interested in investing, or if they're just a talk shop wasting your time. And that time that they waste with you is time you could have been using building your business, or even more importantly, talking to an investor that actually was worth your time. So it is really important. Oluwatamilore, you're right. Founders should do their diligence too on investors. And generally, because when you're taking money in, they're always anti-money laundering and know your customer rules. They apply not just to your customers that use your product, but to your investors that put money into you as well. So due diligence is important on both aspects for founders to do on investors in that regard.
I agree. That's just a good summary of all of the things that investors, that startups as well need to take into consideration, and more. So you should definitely get a lawyer at startups. Please do.
Yep.
So quickly, would ask you questions in a minute for you to answer our hot seat questions. So first off, what's the best investment advice that you've received?
Buy low, sell high. Keep it that simple. You can do all the metrics, but it still comes down to buy low, sell high.
So what do you do?
Well, and you see, now you're getting beyond my station. All I know is buy low, sell high. Everything else is all in long English to me, as far as I'm concerned.
Okay, hopefully it does not keep getting lower. So if I give you $1 million, how would you invest it?
Oh my. So yeah, how would I invest it? Not how would I spend it? Yeah, because if it's how I spent it, I'll spend some and I'll invest some. But how will I invest it? Look, man, end of the day, I always believe in a diversified portfolio, because it's not just about trying to increase returns, but it's also about trying to preserve wealth. So if I had $1 million, I would have a mixed portfolio. I'd have a variety of things. I'd own some things in commodities, you know, whether it's oil or grains or these kinds of things. I'd own some precious metals, maybe some gold, which preserves wealth a lot. I'd own some equities, i.e. shares in companies. It will be a range. Some will be, you know, public companies that are very long standing and very safe and solid. And there'll be a slight portion I'll put in early stage that could give me potentially big returns. And I'm also a very big digital assets person. So I believe in a lot of the technologies in the digital asset space. So I might dabble in that as well as part of my risk investment side of the portfolio. So yeah, I've said a few things, but it will be a mixed portfolio that ranges across a whole bunch of different things, because my aim would be to preserve wealth as well as position myself to try and make more returns on some of the investments.
And as you said, are you going to spend some or invest some? I think you can invest in yourself and then invest.
I like that. In fact, I'm not spending on myself, it's investing. Nice one. Nice one. I appreciate that.
Thank you, Lumi. So what are your final words for us as we close out this edition? What are your concluding words for us, for startup founders listening to you, for lawyers dabbling into the tech industry? What are your final words generally for all of us?
Hard to say. Look, it's an exciting time. It really is. Everything's growing. Nigeria is at the center of it. We're still the hub for the global growth for the next 20 years, believe me. So all the people, all the sort of stakeholders you've mentioned, lawyers, founders, other people in the ecosystem, we have to work more collaboratively. And I think the more we do that, the more we're going to find great innovations and great solutions to our own unique local problems. And then you will find that once we solve those solutions, start being marketed and are commercially successful here, they'll scale globally. So ultimately, I think everyone should just continue doing what they're doing, be the best at what you do, whatever it is. If you're a lawyer, be the best. If you're a founder, be the best. If you're an accountant, be the best. Know that there are no solutions, there are only trade-offs. And the sky's only the beginning. Let's see where we end up.
Maybe that's a lot to ponder on. Be the best, and there are no solutions, only trade-offs. Thank you. So how can our listeners connect with you?
I have a Twitter account at looms_BG. I haven't been active on it of late, but after today's session, I think I'll start talking more on it now. I also have a Substack called LUMI, Level Up My Insights. You can go to Substack and find that. Maybe once a month, I write some analysis. It could be on media, entertainment, tech, or macroeconomic issues that matter to Nigerians. And we can just take the conversation from there. But yeah, please feel free to follow, engage, and I look forward to speaking to everyone.
That's noted. Thank you. So thank you very much, Lumi, for joining us, for taking out your time. This has been a very engaging and insightful session. We're really grateful. And thank you to the Founders Factory Africa team as well for letting this happen. We're very grateful. To the audience, thank you so much for joining. You have made this extremely a delight. We're grateful. Thank you for taking out your time. To the Aluko and everybody team, thank you so much. The startup team, thank you, Dr. Atolo. Thank you, Toju. Thank you, Tammy. Thank you, Mimi. Thank you, Greg. Thank you, Ebube and Fumi. We're really, really grateful. So everyone, remember, there are no solutions, only trade-offs.
And on that note, have a great weekend, everyone. But yes,
have an amazing holiday. Thank you. Bye.
Guys, take care.